Welcome to the August 2018 edition of the OPEC Monthly Oil Market Report, or MOMAR. Today we would like to present a short overview of the key highlights of the report, as well as the main changes and revisions from last month. We also invite you to view or download the complete version of our MOMAR, which can be accessed on OPEC's official website at www.opec.org. It provides comprehensive coverage of oil market developments over the past month, as well as a detailed view of what our expert analysts forecast for the months to come. After growth in major OECD economies slowed in the first quarter of 18, the growth dynamic has since diverged. A very strong second quarter of 18 growth in the US contrasts with a continued slowdown in the Eurozone and the UK. Japan's growth is picking up, albeit from a very weak first quarter of 18. In the emerging economies, China has done better than expected in the first quarter of 18, and India is maintaining a solid and relatively high growth momentum. On the other hand, Brazil is facing ongoing challenges, and Russia is continuing its low growth pattern. These counterbalancing trends have kept the global growth forecast at 3.8% for 2018 and 3.6% for 2019. Diverging growth trends in the OECD have kept the group of countries' growth forecast unchanged at 2.4% for 2018 and 2.2% for 2019. The consequences of monetary tightening in the US, to some extent in the Eurozone, and to a lesser extent in Japan, are reducing the OECD growth dynamic in the coming year. After some softening of the growth trend in the first quarter of 18, U.S. growth rebounded considerably in the second quarter of 18, driven by fiscal stimulus measures and still relatively accommodative monetary policies. GDP growth is expected to reach 2.9% in 2018. In 2019, U.S. economic growth is forecast to slow down to 2.5% due to monetary tightening and a cyclical slowdown. As a result of significantly slowing growth in the first half of 18, the Eurozone's 2018 growth forecast was revised down to 2%, compared to 2.2% in the past month. The 2019 growth forecast was revised down to 1.9%. Japan's 2018 and 2019 forecast remained unchanged at 1.2%. Among emerging economies, China's growth forecast was revised up by 0.1 percentage point to now stand at 6.6% for 2018, followed by 6.2% in 2019. India's forecasts are unchanged at 7.3% for 2018 and 7.4% for 2019. Growth in Brazil was revised down to 1.6% in 2018, followed by a rebound to 2.1% in 2019. Russia's GDP growth forecast remains unchanged at 1.8% in 2018 and 2019. While the relative strong global growth trend seems to continue, numerous challenges have emerged. The main areas of concern include political uncertainties. Among these, it is trade-related developments in particular that warrant close monitoring in the near term. Rising trade tensions leading to mounting uncertainties, translating into falling business and consumer sentiment, may provide a significant downside risk to the currently relatively positive outlook. Negative impacts on global investments, capital flows, and consumer spending may also have a detrimental effect on the global oil market. The chart on the left illustrates world oil demand growth revisions between the July and August editions of the MOMAR. For 2018, world oil demand is assumed to rise by 1.64 million barrels a day, revised downward by 0.02 million barrels a day compared with the previous month's report. Global world oil demand is now projected to average 98.83 million barrels a day. Oil demand growth in the OECD region was revised higher by 0.05 million barrels a day in the first quarter of 18 and second quarter of 18 due to better-than-expected data in OECD America US. Firm light and middle distillate demand, supported by a healthy petrochemical sector and positive developments in industrial activity, were the basis for these upward revisions, which resulted in an overall adjustment of 0.03 million barrels a day for 2018. In the non-OECD region, oil demand growth was revised downward during the second quarter of 18 by 0.1 million barrels a day on the back of weaker-than-expected data from the Middle East and Latin America. This is in line with fuel substitution, subsidy reduction policies, as well as slower overall industrial activity impacting oil demand. On the other hand, strong economic momentum in the other Asia region, including India, supported positive upward revisions of 0.03 million barrels a day in the region for the first quarter of 18. For 2019, world oil demand growth is projected at 1.43 million barrels a day, 0.02 million barrels a day lower than last month's projection. The OECD region is expected to add around 0.27 million barrels a day of potential oil demand growth in 2019, with the bulk of this originating in the Americas. In the non-OECD region, oil demand growth is anticipated to improve in Latin America and the Middle East from levels seen in 2018, despite minor downward adjustments compared with last month. China and India will experience their highest growth levels in 2019. The non-OECD region is expected to see growth of around 1.16 million barrels a day in 2019. Non-OPEC supply for 2018 is estimated to average 59.62 million barrels a day, representing an increase of 2.08 million barrels a day year on year, indicating an upward revision in the supply growth forecast of 0.08 million barrels a day. The main reason for this upward revision was an upward adjustment in China's supply forecast due to higher than expected oil output in the first half of 18. In 2018, the key drivers for growth are the US, Canada, Brazil, Kazakhstan, the UK, and Ghana, while declines will be seen mainly in Mexico, Norway, and Vietnam. Non-OPEC oil supply in 2019 is projected to grow by 2.13 million barrels a day to average 61.75 million barrels a day, indicating an upward revision by 106,000 barrels a day following the reassessment of China's supply forecast for the next year. However, in terms of year-on-year growth, it was revised up by only 34,000 barrels a day, owing to downward revisions in the supply forecast for the US and Australia. US supply is expected to grow by 1.4 million barrels a day, Brazil by 0.4 million barrels a day, and Canada by 0.3 million barrels a day. Australia, Kazakhstan, and the UK are growth drivers, while Mexico, Norway, and Vietnam are expected to see mainly declines. The 2019 forecast is subject to many uncertainties, such as oil prices, investment and cash flows, hedging, cost inflation, production taxes, and unexpected production outages related to technical issues, delayed startups, pipeline capacities, geopolitics, and unplanned maintenance. The right-hand graph shows a list of countries that constitute the main drivers of non-OPEC supply growth, as well as those producing countries that are expected to show the largest declines both this year and the next. The U.S. has remained the main contributor to liquid supply growth at 1.7 million barrels a day in 2018. Growth is expected to take place at a slower pace by 1.4 million barrels a day in 2019 due to takeaway capacity constraints in the Permian Basin. Looking at OPEC crude oil production for the month of July, according to secondary sources, total OPEC 15 crude oil production averaged 32.32 million barrels a day, up by 41,000 barrels a day from the previous month. While crude oil output mainly increased in Kuwait, Nigeria, the UAE, and Iraq, production declined in Libya, Iran, Saudi Arabia, and Venezuela. Moving on to oil inventories, we can see that June data shows total OECD commercial oil stocks fell by 12.8 million barrels month on month, to stand at 2,822 million barrels, indicating a deficit of 33 million barrels below the latest 5-year average. Within components, crude fell by 22.1 million barrels, while products rose by 9.4 million barrels month on month. Crude and product stocks indicated a deficit of 18 million barrels and 15 million barrels below the latest 5-year average, mainly due to higher conformity by OPEC and non-OPEC participants, as well as better than expected demand in OECD countries. In terms of days of forward cover, OECD commercial stocks fell month on month in June to stand at 58.8 days, remaining 2.1 days below the latest 5-year average. Within the regions, OECD America and OECD Europe stood at 1 million barrels and 6 million barrels above the latest 5-year average, while OECD Asia Pacific witnessed a deficit of 40 million barrels. It should be noted that the overhang has been reduced by more than 370 million barrels since January 2017. The 2018 demand for OPEC 15 crude is projected to stand at 32.9 million barrels a day, 0.6 million barrels a day lower than in 2017. According to secondary sources, OPEC crude production averaged 32.4 million barrels a day in the first quarter of 18, which is 0.1 million barrels a day higher than the demand for OPEC crude. In the second quarter, OPEC crude production stood at 32.2 million barrels a day, which is 0.2 million barrels a day lower than the demand for OPEC crude. Based on the forecast for demand and non-OPEC supply, including OPEC NGLs and non-conventional oil, for the year 2019, demand for OPEC 15 crude next year is forecast to decline by 0.8 million barrels a day to average 32 million barrels a day, around 0.1 million barrels a day lower than the last assessment. Thank you for joining us for this overview of the key highlights and changes in the August 2018 edition of the OPEC Monthly Oil Market Report. For more detailed information on this and other reports, please visit our website at www.opec.org. We appreciate your interest and look forward to you joining us again for the next edition of the MOMAR, which will be published on the 12th of September 2018. Until then, goodbye.